The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Boy, do we have a lot of stuff going on out here. It's another week, and if you're long, you're probably not too happy, and if you're short, you're singing a jingle. And, of course, I'm singing a jingle this week. Came in fact, started going short in the newsletter last week, and I think it was well worth it. There was that Tuesday before the election, especially about mid-afternoon, we were doing the show. I was saying that the clues were pretty much in there, that it was the stinkiest stocks that had rallied. Apollo, the for-profit education company, a lot of the other ones that are just massively short, they were running them into it on light volume again today. I was watching the market from about 12 to 1 while I was writing the end of the Tech Insider. I was watching the volume just creep along, just creep. Ended up doing about maybe 150 million shares in an entire hour. And, of course, we're talking about doing 4 billion shares a day. And that's 6 hours. So, 150 million shares is nothing. And it was just creeping, and it was ticking up, 15 tenths. Maybe a big tick was 3 tenths. Of a point on the S&P, and just nothing happening, no volume. I watched it go from about 1.6 billion shares to about 1.7 billion or 7.5 billion shares over an hour. You could just tell that this thing was getting ready to set up a lot of traders, and I suspect we're going to have a pretty ugly close. Is it going to be just bloodbath-like? Hard to tell at this moment, but I can't see a lot of people not pulling the trigger by the end of the day if this thing gets a little more ugly. So at 1 o'clock we had about 1.75 billion. We now have 2.3 billion. So all the volume, 600,000 shares from 1 to 2 o'clock. That's a pretty good indication. When we could only get from 12 to 1 about 150 million. Gives you a good idea. All the volume came in on the downside, and why everybody, I think, was they were a little bit of that hope and change thing. They were hoping that the president would be very conciliatory, and why he wasn't overtly sticking a thumb in the eye of the congressional Republicans. Certainly didn't throw out a lot of olive branches, kind of waved it at people, maybe even shook it at them. And that wasn't enough. The market figures that there's a good chance we're going off that fiscal cliff. The cynic in me makes me think that a lot of people would love to see those super high rates again. There's two kinds of mentality in politics, and that is that there's unequal distribution of assets, which actually always happens. If you're in communist countries, the leaders all have all the money. Politburo members have it. The only difference is the people that aren't on that level have no chance of ever getting out of it. So it's the unequal distribution of assets or the equal distribution of misery. And the stock market has thought since the election that the American people have voted for the equal distribution of misery. They've bought the idea that rich people are evil, and we're going to go after a lot more of their money because that's what would be fair. And the stock market is giving a resounding raspberry to that idea because rich people will just take their toys and go elsewhere when they have a chance. Of course, right now, most of this movement is most likely looking at people getting out of capital gains taxes this year, figuring that they'll be anywhere from 10 to 15% higher by the time everything is done next year. And I think that's probably a good 10, 15%. So, you got something like Apple at $600. Maybe you've held it since it was $78, or maybe when it was $178. Taking your money now is probably not a bad deal. If you've got losers, two, let's say you have a nice big winner, you take the money on that, go ahead and sell your loser now, and that way you even cut down further what you have to pay on taxes at the end of the year. Normally we start seeing this about the 15th of November or Thanksgiving, a little bit of tax selling, and normally it's fairly minor. This is the other side of the coin of what probably was, I think was it 2000 or 2001 when the Bush tax cuts went on? I think it was 2001, because I remember the stock market was just roaring right up to the end of the year because everybody wanted to come and start selling on January. I think we came back on January 3rd that year. That was the same year everybody had just blown Qualcomm up to astronomical levels. If you look at the chart now, I think it's like it went from like 140 to 190 in the last few weeks of December. Of course, within the first few days of January, it went from that 190, 195 on Qualcomm back down to 140, maybe 7 days. Maybe I'll go pull that chart up later. But a lot of that was caused by organic reasons, and that is no one wanted to sell Qualcomm sitting at tax rates that were going to be, I think at that time, 15% lighter into the new year. So tax policy does make the market move. That's one of the organic things, other than people thinking that the stock's actually going to go higher or lower. Almost becomes a feedback loop in the markets itself. And we can watch it, but I'm going to update my charts just one more time so I can take a quick look and see what we have going on here. And, you know, we've got 1381, so what are we off here? And we're still up about 4 points. But, you know, generally these markets, especially when we get late into the day, the indication is normally to come back and start selling this. You know, can we flip around here a little bit? Yes. You know, Apple was nice enough to get up to about 553 today. It's back down to 545, but pretty much headed on its way to test 522. We do have expiration. Of course, Wednesday was the start of that. A lot of people were getting delta neutral if they could early in the morning. That kind of escaped them. On Tuesday this week, of course, I brought up toward the end of the show, there was a lot of people buying puts, downside puts. And those downside puts for expiration for Friday were all pretty much being bought anywhere from $13.90 to $13.50, which makes me think that those folks were probably buying them for protection. So they think that maybe $13.50 is the bottom. That comes in line with what I'm working at, which is Confluence on the S&P 500. That brings us right in at that $13.50 level, and we'll be continuing to look at that. Tom O'Brien is gone. We're going to have Ken Shreve between 4 and 5 p.m. You'll have me between, between 4 and 5. You'll have me between 5 and 6 p.m. And you know, you can always call in at 877-927-6648. I spent 3 or 4 hours working on content for tonight's show since I'm going to be running it. And we've got just a ton of things to go through and talk about in technology. It's probably one of the most spectacular things has come out, and probably not getting a lot of press. I don't think a lot of people understand just how important it is. But a rather large computer company has given a demonstration in China, and it is really amazing technology. In fact, it's kind of sort of the kind of technology you saw in Star Trek. Made it simple for them to do some things with aliens, and it's very interesting to see this actually pulled off. But it's the next major chapter, I believe, in natural user interfaces. I wrote about it today in the Tech Insider newsletter, which you can always get for a free 2-week trial. And you know, we're going to be watching it closely, but we're seeing a lot of these stocks. The wheat is being separated from the chaff now. You can really watch these things pulling back, and which ones are holding up well, which ones are getting eviscerated. Intel I wanted to get to because there's a lot of loose talk, and by loose I mean probably phony. It makes me think that maybe Intel is getting close to a buy, and a lot of news is being quote leaked to get it down a little farther so people can get a little bit better price. This thing may be in a wonderful trading range from up here at this 29.27 high on May 3rd back down to, maybe the lows back into the 19s or 20s. This thing's probably going to be bouncing around in that area for a while. The false rumor that I see or hear about is that Apple's going to be making their own processor for their laptops and computers themselves. Pretty ridiculous on the event that Intel is at least a generation and a half ahead of any other fabrication company out there. That it's hard to believe that they could ever duplicate that fab part of the business. It's hard to believe that they could actually duplicate the processor business and actually make it any cheaper than Intel would sell it to them. So I'm kind of looking at this. Normally when you see these bad rumors, it's trying to force these companies even just a little lower so people can either cover their shorts or buy the longs. I don't think, when you have what is going to, if you look at AMD, which looks like it's making Intel almost a monopoly, whether or not the best days of PCs are behind us, it's still a monopoly. Every one of those servers that people use in the cloud, every one of those products out there are going to be using, and most likely using, Intel products in the future. Why? They can make the dies on those so much smaller, the traces between them. What does that do? It increases the speed. It also lowers the power. The biggest expense in these data centers is power and getting rid of the heat in the building. These things are nothing but like little ovens, and if you can reduce the heat and the power that it takes, to your biggest costs, actually excavating it, the heat, and actually powering these PCs. There's a lot of talk about low power servers for your mom and pop's website, but to tell you the truth, it's kind of hard to see the huge validity of using those kinds of servers other than just a high-powered server that can handle a lot of those. If you group them right, all the websites that get just a few hits an hour can go on one website, and the ones that need massive go on a server, and with a whole lot less of their brethren sharing the resources of that PC. So, we're still looking at this market out here. I see a lot of stocks, and every indication is they're going to go back and test the lows of the day before the end of the day. But let me get back in here. Yeah, 1383. We've got one of the worst things you could hope for, or one of the worst things that could happen, is a light volume pop today. And every indication is that that's exactly what we're going to get. A lot of volume here since the speech from the president. 2.4 billion shares. We'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And if we come back, we're going to get to Skyworks Solution. We had a caller right at the end of the day yesterday calling in. You can call in too, 877-927-6648, 877-927-6648. I'd appreciate it. We've got, I'm kind of sitting on my hands short here, and I'd love to see what everybody is looking for. You know, there's, has there been a light volume bounce in some of these stocks? Yes, but it doesn't matter. The disaster of the day is JCPenney Company, JCP. Earnings came in. Few people can ever remember a company that didn't go bankrupt directly after a report this bad. I think it's off more than 25% in one single quarter. You know, a lot of companies not still around. I remember Woolworths. I guess it ended up being Kmart and some of the other ones, but I know a lot of companies that were in that retail space and just never really ever, you know, came back. And as far as I'm concerned, JCPenney is one of the ugliest companies you can find right now as far as earnings. We are, what I'm looking at here. You got a low out here at $19.06 that it hadn't tested, but you can bet your bottom dollar that July 18th low in JCPenney is going to be tested. 16 million shares. You had 31 million here today already. So you've gotten close and into that volume bar with a whole lot of volume. Let me see if I get a quick quote on what it's printing off here in just a minute. Yeah, off a buck, $20.66. So yeah, is it still up there? Maybe a little short covering before the end of the day. A lot of people saw this coming. It's up at $27. So maybe all the bad news is in on this one. At least some people think it is. But all these retail companies that have reported, let's take a look at Shield, which is another stinker. Yeah, this one's dropped off here today. Sears Holdings, this is a company that's just so highly short because everybody knows it's going bankrupt one day, that they're going to sit on it for 2 or 3 years to get their profit out of it. Doesn't bother a lot of these big hedge funds, but you certainly had a huge sell signal on Sears Holding on November 6th when it went above the previous high of May 1st at $65.70 that had 4.8 million shares. It did it with less than 1 million shares. It's rotating back in. There's a couple of gaps down here with high volume. Look for Sears Holdings to run right back into that $51 to $54 range here fairly quickly, especially with the Eastern Seaboard out of commission. We did have that caller about Skyworks Solution. Not exactly sure what he was looking at other than maybe this thing coming down and testing the gap. That gap started on, what is that, the January 20th of this year. Gapped up on almost 16 million shares. It's come back down on it. But you had more as it came back into that gap on the second, and that heavy volume means that you're going to pretty much go sideways for a while. At best case. At worst case, this thing is going to ABC and bust down yet to another low. So a high volume day out there, exceeding the gap up that actually brought it into that day. You've got 2 huge gaps. Look for one more huge volume day down, and that may be the bottom of Skyworks Solution, SWKS. We've been going through a lot of these stocks in the Apple supply chain because that's exactly what's driving the NASDAQ 100 is Apple and that movement out there. But, we've seen what is, tried to be a kind of bounce out of Apple. Let me pop that up real quick, too. But I suspect it's just a little market gas on the way down, 547.32. It's up almost $10. We can continue to see that we're probably going to flutter around here. On Monday, I'll give you a better indication of what the options say, but a lot of this may be option related. It may take till after next week to get this thing back into that low and test 522. There are so many options on this. A lot of what's driven in the market is exactly that. Macy's is still around, actually. Yeah. But it's been fairly good when I'm around. Steve, our producer, is chiming in from the peanut gallery and getting the audio back for our break here. We will be back in just a minute. Give me a call, 877-927-6648, 877-927-6648.
Heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Yeah, we've got a little bit of juice in this market, 1386, but certainly the last 20 minutes, volume's been light. 2.5 billion shares. Do we have a bottom out of here? Maybe for the expiration week. I don't think so, though. I think when you get markets in this kind of bad mood, they take some big moves down. I suspect you need one good gap down, maybe two, to get this market scared, get the VIX up. With a VIX in the 18s, it's just like people saying, I'm not scared at all. You know, is that all you have? And normally when you have that kind of hubris, when you're not worried about the market going down, that's when you expect the giant surprises. I think we could still get something like that. Appreciate any phone calls, 877-927-6648, 877-927-6648. We'll be glad to discuss your stock. We wanted to get to Skyworks Solutions, and we talked about that for a little bit. We got into that. But when you really look at these, Qualcomm, it kind of tried to jump yesterday, closed lower. It's kind of trying to a little bit more today. I suspect that if with market weakness, if I'm right, that the time to buy this thing would be back down at about $57.29 on lighter volume than 13 million shares. And could we get that in a low volume retrace into next week's expiration dates? And I think the answer is yes. But I'm still looking for some weakness and not to try to buy these things on earnings expectations. Again, we talked over the last few days about this pattern of just lower highs and lower lows. And we're going to have to see some kind of resolution out of these. And, you know, if it's to the downside in these patterns, normally that's a head fake, and that would be the best time to buy some of these stocks. OmniVision makes the cameras in a lot of these mobile devices, and it's got a nice little gap out here, and about $13. I'd love some of these just to go ahead and come on back, light volume, setting up some buys. You know, probably tax selling going to be over by the 15th of December. Maybe a good opportunity or chance to actually see some of these stocks come back and get another opportunity to buy them. So far, we haven't done anything that makes the long-term up part of this market totally go away. We've had some signs, strong signs of weakness. We need a couple more of them to actually put the lid on it, but that may be just enough to take the froth out of the market, a bubble out of it, and keep an eye on it. We're seeing some of these stocks just continue to weaken. One of the ones I've been trying to follow a little bit is FIO. It's got its own individual problems, but not a bad-looking chart out here. FIO is the symbol for Fusion IO. This had a nice little gap with huge volume up. So there are stocks out there that we could buy if this thing could turn around. This thing actually popped on 8-9 with, so what is that, August 9th, and what do we got, 4.8 million shares that day. And, you know, we've gotten back into it, and the volume has been pretty nice. What do we've had, 3.3, pretty much all the other ones. 1.3 million shares today, so not bad. Some of these are back at fairly decent support. If they can hang on to it through what I think is going to pull back to 1350, not too bad. Anyway, we've got Anthony from St. Pete Beach. And how you doing today, Anthony?
Good. Yourself, Dave? How you doing?
Pretty good.
Hey, you trade the euro, right?
No, I really don't. I trade pretty much stocks and futures, futures in energy, futures on the like the S&P, rarely, but mostly I do that. I watch the dollar-euro movement out here, and
right.
What's your? But mostly just to look at maybe trading gold and that kind of stuff. What's your question?
Oh, I heard you say the other day that if you were quick on the trigger to, you know, when Draghi came out, I thought I heard you say.
Yeah, I was short. Yes, that morning I was up early and I was hitting the ES futures. I was selling them into that move that morning, and they were up about 8 or 9 points early in the morning, and they continue to just continue to But
right.
I was sitting right there when it happened. I got up about 4 o'clock that morning, or 4:30, because I just couldn't sleep. I actually fell asleep about 8:30 that election night, and it was like I woke up at 4 o'clock, still sitting in the easy chair and thinking, I shouldn't have done that. I'm going to be stiff all day. But no, I mean, I watch all those pretty much all day. In fact, I have normally. Go ahead.
My main question was before we broke through the 128.20, we had a range of roughly 130, 170 to 128.20. Now that we've broken through. And we've also broke through another threshold, the 127.17, and we came right down to the 126.90, which was another threshold. I was wondering if there's a new range in there.
Well, I'm going to tell you what I think I see in the dollar index, because that's normally what I'm watching, and I think that we're headed up to 85.
Okay.
So I think that between now and Christmas, we could easily get into that range without any kind of problem. So
we definitely broke out of that downward trend of the dollar.
Yeah, I don't think that. I think that basically we have a few things going on, and the idea that we were actually going to take a lot of money out of the economy with higher taxes is going to drive the dollar up significantly. And, of course, in the beauty contest, Germany's really officially entered a recession. We've seen
that was the prettiest girl on the block, and she's not looking so good anymore.
No, and you pretty much with Draghi coming out and some of the other ones saying that we said we were going to give you money, Greece, but that you had to kind of like take a bunch of guys and throw them out the front door to get your vote through. We really just don't quite believe you. And we're going to have to
fall right into the riot.
Yeah, we're not going to have to. We're going to kind of think a little bit harder about this. We need to send some investigators in to find out if you're really just fibbing to us.
Spain too.
What's that?
Spain as well.
Yeah, Spain's a little different thing. Greece is kind of a smaller country and centrally planned. The biggest problem with Spain is one of those things. It's like an octopus. They've got like 26 for a fairly small area. They've got 26 like states, and everybody has their own little fiefdom, and no one knows really what's going on in there. And I think that when they get mired into that, it's going to be it's going to be a tar baby that no one wants to even start poking at, just because there's so many levels of bureaucracy, and everybody has 3 assistants, and each one of these little states has all the bureaucracy the entire nation needs, but of course it's all feather bedding out there. My partners that were in the company I was with went ahead and retired and went to Spain. I've been trying to get a hold of these guys. I haven't talked to them for a number of years, but one of my other guys that was kind of the king cheese of the company lives not too far south from me, and I've called him trying to get maybe get them to call me and see what they're saying from the inside of Spain.
Right.
But I just it's just kind of hard to see. This guy had a heart attack, and he said, "You know what? I'm getting out of here. I'm going to go retire to Spain," and he did about a year and a half after he had his heart attack. But I haven't really heard anything from him since then. A very smart guy. He had a couple of sayings that were always great. He always said, when we were hiring engineers and stuff, he says, "Dave, you always want to hire one high jumper that can jump 7 feet, not seven guys that can jump 1 foot."
Yeah.
So he had some other ones too, like I'd always be on his rear end about getting some product out, and he'd always say, "Doesn't matter, Dave. 9 women can't have a baby in 1 month." He always.
I don't know.
He was just. Go ahead.
In any event, I don't know how that Eurozone is going to really pan out, and I don't know how they figured that was going to work, or if it's really going to work, and if Greece is going to stay in or Spain's going to stay in, and what that's going to do to the whole Euro.
Oh, I think what we've seen is a bubble created to get a result in the elections. We've gotten that result. Now everybody sees what they've gotten. There's buyer's remorse because everybody thought maybe everybody else was going to vote for the other guy, at least in the stock market. I think that the majority of people out there are back to buying their 6-packs and getting their DVD at Coinstar tonight. And we got, a good section of the people that are still not getting to work on the subways in the Eastern Seaboard. And we just got probably every kind of thing on our plate that we can stand, and not a whole lot of visible leadership. I think,
Anywhere. Anywhere.
Yeah. No, if I was president the day after, and I found out I was president, I'd get Rudy Giuliani on it right now and just say, "Hey, here's a gun. You can shoot anybody you need to get whatever you need done up there, but clean that place up and get it done now." Because he's probably one of the few people that could get the kind of respect after 9/11 and everything else to try to figure it out.
You didn't hear about it in the national media, but they had a bunch of people coming up from the South here that were non-union, and they told them to go back.
Yeah, it was everybody, the Georgian electric companies. And did you? They were very vulgar to them at the same time. But you know
what I'm saying? I can't believe that.
Well, I'm going to tell you a story here, and this is why everybody will tell me that I'm anti-union. But we went to the National Association of Broadcasters, and this had to be probably 1991 or 1992. And I was living in Cincinnati. We shipped our entire booth and trade show and everything up. Cost us $1,500 to get to the floor of the Chicago McCormick Center. The union goons wanted $1,500 to take it from the loading dock and put it in our trade show booth.
And not set it up, just put it there, right?
Just take it and drop it 200 yards after we'd shipped it from Cincinnati to Chicago. So everybody got together, and that was it. Within 45 minutes that morning, the National Association of Broadcasters, I think it was close to 100,000 people attend, was no longer ever going back, and it always went back to Atlanta. And that was it. And, you know, at one point, you are going to kill the goose that laid the golden egg. And in this case, I think it's criminal and totally un-American to turn anybody around that would help get electric.
You know what I'm saying? It's not like they were trying to go up and take jobs away. We got people suffering here.
No, well, that's exactly what the union guy said, that you're trying to take our jobs away, scabs. I saw it all on the TV. I saw it all on the TV, but it's, you know, it's not going to matter. There's a whole culture up there on the Eastern Seaboard that would rather burn the place to the ground and live with their dogma than get it fixed. And that's always been it. I've always heard that there was another guy told me, he said, there's two kinds of people, and mostly he was talking about Oprah and other people. He says, you're out there, your car's, you know, radiator overheated. You're out there in the middle of the desert. It's 120 degrees. There's a certain set of people who are going to want to have someone come out and hug them and tell them everything is going to be right. And then there's the other people with a brain, and those people just want to get it fixed and get out of there. And unfortunately, we've got a lot of huggers where we need a lot of people to say, let's just get it fixed and go on, and that's tough.
Tuesday showed up.
Well, on the market is a great indicator. It's going to tell you what's going to be good or bad for business, not necessarily the nation. And a lot of people think that again, the distribution of equal distribution of misery is more important than the unequal distribution of assets. You have any other questions, Anthony?
No, Dave, thank you for your time, and thank you for the great conversation. You have a wonderful weekend.
You too. Thanks for the call. And again, you can call 877-927-6648, and you can always tell me I'm all wet if you like. I am fairly couched in my positions. It would take a lot to make me believe that what I believe is probably not the right thing, but I'm open to good arguments. Specious arguments, arguments that target the heart instead of the head, generally don't go very far with me. I am definitely the guy that you want to find out there in the middle of the desert when your car's broke down, because I'd fix it. I wouldn't give you a hug. I might say kind words to you. Might. Don't know. Hard to tell. Might just say, that's your problem, lady. There's your problem. Anyway, be back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Well, we're getting down to that moment of decision whether or not you want to hang on to these stocks over a weekend after having a pretty bad week in the market. And, 1382, 2.6 million shares. Tried a few times to pop this market up once again. Really just didn't get much out of it, and the volume's gone light again. So I imagine that we're probably going to see a little nastiness. My educated guess right now would be somewhere close around 1375, something like that. Looks like what it is. A lot of this may be, part of this may be mitigated by next week's options expiration, but I think what we're probably going to see is some kind of low by next Wednesday. That gives us an opportunity to have one or two big days down. I'm still looking for 1350 as the point where the first opportunity to buy in this market would come. And I think there's fairly decent indicators out here that give me that. We've got some other news out here. I'm going to talk about it tonight, and that's Lockup Ageddon. Facebook, of course, we now see that the CFO of Facebook dumped another 3.5 million shares over the last couple of weeks. So is that in and all be all? No. But guess what next Wednesday is? Another billion shares. It's going to be a tidal wave, a tsunami, a nice little hurricane, the swell of Facebook shares continuing to come onto this market. I think that there's probably a fairly decent indication that this thing's at minimum going to hit 1755 probably next week. Whether it breaks it or not will be the thing to be watching, but I don't see a whole lot out here that can save it. It is musical chairs, and what are they going to do? They're going to get every double the amount of shares out and throw it on the deck and see how many they can fill. If there isn't an ass for every seat, as one of my first persons told me, that's the way it works. If there's not an ass for every seat in the market, then it's going down. And that's going to be the problem when they start selling. Of course, this is going to be the weakest hands in the market, and they're going to be the most likely to sell. But that starts the 15th and 16th. It's kind of split in there, but it's 15th and 16th of next week for Facebook. We also, Tom and I, warned fairly effectively, I think, about Groupon, GRPN. That's hitting yet another new low. Everybody was rather happy that at least the CEO has quit putting videos of him running around in his underwear on YouTube no longer. So he's maybe not just the kind of flake that everybody thought he was at the beginning. But today, huge volume out here. The belief is that they even firing another 80 or 85 people yesterday is not going to be enough to get this company back on track. They're spending a lot of money overseas that they think something might get going over there for them, but still hemorrhaging money. And if you remember the discussions we've had, a horrible business model, and that is that you can't really defend it. This is the same kind of problem that you get into with Netflix. It is a hard business to defend against. In business school, they call it, is it a defendable business? Can you make it hard for other people to get in there? Barriers to entry. And unfortunately, even the other one, Living Social, ended up taking almost $300 million out of Amazon also. I am going to be hosting the whole 5 to 6 thing. So if you've got a question, you may want to call in then. I've got just a ton of articles to go through tonight. I think it's going to be probably one of the best shows we've done here on technology. So a good chance to tune in between 5 and 6 tonight. And start off at 4 o'clock with Ken Shreves. I think he's coming up right after me anyway. So you get a double shot of Ken Shreves, then a single shot of me, the Chaser.